This video is based on the technical analysis of Nasdaq 100, which is also known as US Tech, and we're on the weekly chart. And in regards to the weekly chart, we can see that at this point in time, the market is at a very strong level of resistance, and at that level, we also had this M structure. And what this means, in other words, is that the market is actually at the neckline of that M structure, and that tells us that we may possibly get a reversal of sorts. We may possibly get a reversal of sorts because, as I said, guys, we're at a very strong level of resistance at this point in time, as we had multiple rejections in and around that area. And number two, we had also had this M structure, which had a neckline at that point, and this tells us that at this point over here is where we may potentially get a reversal of sorts, right? Anyway, from here, let's head down to the daily chart and see what's happening down there. And here we are on the daily chart, and on the daily chart we can see that we are indeed in an upward trending market or an upward trajectory. But just to zoom in on the daily chart, we can see that we had actually had what is an overextended W structure over here, which has a neckline at that point. And as I usually say every week, guys, whenever we have these patterns, we want to see price breaking to the upside of that neckline, then coming back to the neckline to give a test, and at that neckline is where we look for those potential buying opportunities, especially if the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool. If you were to utilize Fibonacci, you would actually see that the neckline of that W structure actually aligns with the 50% Fibonacci retracement level, and that adds as confluence in as far as looking for potential buying opportunities goes at that neckline. Can you guys see that? So what I'm saying in other words is that should the market from where it is, which is over here, move further down to around this level, right, at that level is where we would look for those potential buying opportunities, because as I said, guys, we have a very nice overextended W structure there. To add to that, we also have the neckline aligning with the 50% Fibonacci retracement level at this point over here, right? So should we get a reversal at this point, because remember, price is at a very strong level of resistance at this point in time, and we'd also had an M structure rather, and the M structure had a neckline at that point. And should price, as I said, move further down, at this point is where we should look for those potential buying opportunities. Also, if we were to look at this area over here, we can see that we actually have a reversal candlestick, and there is a pin bar, and it tells us that we may indeed see the market move further down, and at least to around this level over here, right? Anyway, what else do we see on the daily chart? On the daily chart, I don't see much. Let's head down to the H4 chart and see what's happening down there. Just bear with me. H4 chart, and here we are on the H4 chart. And just to recap, guys, remember on the daily chart we spoke about how we have this W structure, which has a neckline at this point, and that should price from where it is move down to this level. At this level is where we should be looking for those potential buying opportunities. We also said that the neckline of this W structure aligns with the 50% Fibonacci retracement level, which adds as confluence in as far as looking for those potential buying opportunities at this point. But here we are on the H4 chart. What do we see on the H4 chart? Remember, guys, also, as I said earlier, we're at a very strong level of resistance, and we had multiple rejects in and around that level, and also price is at the neckline of that M structure that we spoke about on the bigger time frames. To add to this, on the H4 chart, we can see that we also have within the zone an overextended M structure, and it is indeed an overextended M structure because that first leg is actually much lower than the second leg, and it has a neckline more or less at that point. In fact, let me just add the actual neckline. So in as far as looking for selling opportunities goes at this point, the best thing to do, in my very humble opinion, is actually to wait for the market to close below that neckline of this overextended M structure, and then for it to head back to the neckline to give it a test. And where we have that neckline is where I believe we should look for those potential selling opportunities, especially if the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool. So in other words, I would say the best thing to do, just to repeat myself, wait for one of the H4 candles to close below this level over here, which is where we have the neckline of this M structure, and then again wait for it to head back to the neckline to give it a test. and at this point is where we should look for those potential selling opportunities. And if we do find any good ones, we should sell, and our take profit should be around this level. And at this level again is where we have that neckline of that huge W structure that we spoke about on the daily chart. And remember also that this neckline aligns with the 50% Fibonacci retracement level, and at this point, as I said, is where we should look for potential buying opportunities. In other words, we're not just going to buy, we're going to look for potential buying opportunities, which means we need confluence and confirmation before we make any buying decisions. And if we do indeed buy at this point, I believe that we should hold up until price reaches, if I can just go back to the daily chart, let's have a look. I would say if we do indeed buy at the neckline, which is over there, we should hold up until price actually reaches this level over here, right? That's the first take profit, and the second take profit, the second take profit rather, is at that level over there.